G'day guys, Spittin Chips here. Alright, got another fun packed session for you regarding PulseChain and Ethereum, as well as other smart contracts and comparisons. So I was going to do a deep dive into PulseChain, Ethereum, as well as the other major assets of the PulseChain ecosystem, and that would be PulseX incentive token and the Hex on Ethereum, as well as Hex on PulseChain. But there's just too much content. There's too much content for one video, for one live stream. So what I do is I just focus on the comparisons between Ethereum and PulseChain, and then we'll see how we go for the timing. And if it's not pushing over too long, I've got other things to do as well. It's a great day today, so yeah, we'll just focus on those 2 points, and if I get some more time, possibly merge over to talking about PulseX, but this one will be just primarily comparisons between Ethereum and PulseChain. All right, so let's start with what I thought was a very significant quote, and it's something that not a lot of people have been talking about, and I think it's good to focus on. And this is Richard Hart's Twitter, his X profile, and this was a statement of his back in 10th of April 2024. And of this one, he's stated here, PulseChain is freedom of speech and the freedom of association of software. Now, no one has really expanded from my knowledge or from what I've heard or seen on this statement. And for a while, I was also thinking about this statement. What did it mean? And I thought that it was obviously my choice, my freedom of choice to choose to participate, invest, and do what I want to in the crypto atmosphere, and progress from there. But there was actually, from what I've discovered, there's a more in-depth knowledge here to be learned, and it actually shows why PulseChain, as well as Ethereum, but mostly how PulseChain is the most democratic layer 1 ecosystem in the whole crypto sphere. It truly is. So we'll get over to here. I'm on ChatGPT, wonderful ChatGPT, and we'll go straight into that. Now, I was asking here, can you provide a perspective while investors would choose PulseChain over other layer 1 smart chains? So just turn down that volume of that music. There we go. Okay, so when considering an investment in PulseChain compared to other layer 1 smart contract platforms, it's important to weigh in the distinct advantages of PulseChain offers, especially in the context of its unique design choices, value proposition for scalability, security, potential rewards. Based on other features discussed above, let's break down why an investor might choose PulseChain over other layer 1 smart chains. High scalable network architecture. Now this is amazing stuff. Round of applause to whoever created this, designed it, or was, if it was solely done or with a group idea, a think tank, because this is just brilliant. They created parallel, as far as I know, they created, the PulseChain designers created parallel execution. So what this has done, and this is compared to serial execution, and this is going down to the bread and butter of what the nodes will do. And the people that complete the work of the nodes is the validators, and this is for PulseChain I'm talking about, the validators and the delegators, but we'll just stay up here. So PulseChain scalability is one of the strongest selling points. Its design supports a high throughput with theoretically upper bounds of as high as 1 million TPS. TPS is transactions per second. Now, there's a lot of other layer ones preaching the most amazing and fastest transaction speed, but are they actually doing this on a decentralized platform? PulseChain is the most decentralized. It's 100% decentralized. And the reasons is you will find out through the information I'm going to provide you. Now, all this information is from ChatGPT. So background knowledge and priming has provided this amazing information, and hats off to GPT to providing it. ChatGPT is a great way to progress your knowledge. You just got to be vigilant of what you're asking and saying and everything else. So PulseChain scalability is one of the strongest selling points. Its design supports high throughput with theoretically upper bounds as high as 1 million transactions per second. This is dramatically higher than most other layer 1 blockchains, including Ethereum, which has much lower TPS, transactions per second. Ethereum 2.0 can handle around 100,000 transactions with sharding, but PulseChain claims even higher potentially. The network is built for parallel execution rather than serial execution, which means PulseChain can process multiple transactions simultaneously, drastically increasing the scalability and making it well suited for applications that require high transaction volume, e.g., for example, decentralized finance, gaming, and NFTs. Wow. So for all aspects of the digital atmosphere, you have your gaming, you have your NFTs, non-fungible tokens, and you have your decentralized finance. Is literally the pillars. There are your pillars of crypto. If you're willing to excel in the expansion of IT and everything else that happens on the interweb, the internet, this is the points where you want to address it, and it's just doing that. And the reason it's doing that is because it's parallel execution. Now, just think of a bottleneck, and parallel execution means you have one. I'll do it this way. You have one, and then you progress from one, and then you have the next one after that, right? That's parallel. Well, that's serial. Parallel is you got two getting completed at the same time on the one for the one block. This is amazing. Why is it attractive to investors? Highly scale. So this is from an investor's perspective. You're considering, why would I invest into PulseChain over other cryptos, layer ones, ecosystems? So it's the high scalability, transfers into lower fees, higher transaction throughput, and better use experience for applications built on the network. With PulseChain offering such high scalability and low cost compared to Ethereum and other smart chain applications, could scale significantly without hitting performance bottlenecks. So it's saying here there is a base layer, and it can go beyond that. Scalability means further upgrades, further designs, further improvements on the hardware side of the processing of the computers and servers and everything else, line connections, data transfer. It's actually stating here unlimited. You've got a base point and you're just going beyond that. The lower gas fees and faster transactions. PulseChain was specifically designed for lower gas fees compared to Ethereum. In PulseChain, gas costs are far cheaper due to the high throughput and efficient architecture. Ethereum, while transitioning to proof of stake, so Ethereum was originally a proof of work. It's now transitioning to proof of stake with Ethereum 2.0. To reduce fees, still faces higher gas costs due to the congestion, especially during periods of heavy usage. PulseChain's faster block times and cheaper transaction costs make it attractive for developers and users, especially in areas of DeFi and NFTs. Why? So we understand DeFi defines DeFi. Do you understand why it's significant for NFTs? Well, DeFi, so it's decentralized finance, which means it's relying on the individual, not the system, to complete the transaction. NFTs, well, that is giving you the ability to involve real world situations where you need confirmations. For instance, when you're sending a parcel and they say tracking, I want to track this parcel from one destination to another, this is when you can use NFTs. Much cheaper. Have you ever done that when you want to track a package, and how much does that cost you? Several dollars from my memory. So why is it attractive to investors? More efficient transactions, faster adoption, larger ecosystem growth, the engagement, low inflation and token emissions model. PulseChain's token issuance is designed, issuance, so I issue, is designed for low inflation compared to other chains, especially Ethereum, where the inflation rate has been a concern for many investors. For some investors, but I think it's many, and the inflationary tokens supply model for PulseChain is structured decentralized validators and delegators while maintaining long-term value for the token holders. So the significant difference between Ethereum and PulseChain will now be said. So have you heard of proof of stake? Right. So there's two in my previous live stream. I discussed proof of stake and proof of work. Well, there is delegated proof of stake and proof of stake. What does this mean? If you're new to this system, if you're new to the ecosystem or new to crypto, you're going, well, what does this mean? Okay, so proof of work, miners. It's computers completing it, right? So it's computer just purely on graphics cards completing it as well. And it's whoever can complete it, the quickest. We're merging over to proof of stake is that you have a minimum requirement, and then from that minimum requirement, i.e. the core token, the layer 1 token, so ETH or PLS, with that allocation, it increases your ability to be voted in to complete the actual block. So complete the transaction. There's transactions in the block gets completed, you move on to the next one. But with delegated proof of stake, it's a mechanism which allows validators to be selected based on the amount of stake delegated to them. So you need to complete these transactions, you need computing power. And these computers will obviously complete the algorithm, the cryptographic algorithm. So it's saying that there's a maximum of 33 validators. The validators are the ones that complete the algorithm, the cryptographic algorithm. And if what you can be is a delegator, and you have your own pulse, and you want to go, right, there is these validators, maximum 33, and you'll see which one has the best reputation. And with that reputation, you can delegate your pulse tokens to that validator. So you're doing a voting mechanism. And also that person can also be voted. The validator can also be voted on their performance. So they can get kicked out. They can get removed from the 33, the top 33 allocated the top 33 validators. Now, this is different to just proof of stake. In Ethereum's case, there's a maximum here of 33, whereas in Ethereum stake, that's just open. Obviously, yeah, there can be more validators that would put their hand up and say, hey, yeah, I can do the task, let me do it. But when it comes down to the voting mechanism, the delegates obviously say, okay, I want to put all my PulseChain tokens, layer 1, into and allocated to, obviously they're keeping it, they're just staking it towards this validator, and that's how the validator gets voted to do the primary amount of blocks and transactions. So you're voting. It's very democratic, you see, where other ones it's not the case. So you have, and because of that, because you've got a delegated proof of stake, which means there's a max amount of validators, that means it increases the speed, reduces congestion. It's a faster throughput allocation. Here's 33, choose from, not like here's a big wide spectrum of possible validators that complete this task, and they're all fighting to do the task. So the PulseChain DPoS, Delegate Proof of Stake mechanism, allows for validators to be selected based on the amount of stake delegated to them. So the amount of staked Pulse, making it highly flexible and scalable. Validators are incentivized to maintain high performance to attract delegators to grow their stake. So what it's saying here is that the validators must have a great internet connection. They must have up-to-date servers and computers and doing everything they can to ensure that they are operating at the highest level. And if they don't, sorry mate, you're out of here. You're going to improve your shit before you can come into this section. And also with that is completing accurate transactions and blocks and not being nefarious. With delegation, back onto here, with delegation of small investors can smaller investors can participate in securing a network without needing to run their own validated nodes. So that is, the node is obviously the farm, the server farm, all the computers that are doing or it could be one computer, but there's a minimum requirement obviously for the processing to do this. The node, so that's the validators, the node. This creates an inclusive and decentralized ecosystem where token holders can earn passive rewards by simply delegating their Pulse tokens to trusted validators. Wow. Excuse me. So why is this attractive to investors? The delegation system allows more passive involvement for token holders, making it easier for investors to stake their tokens and receive rewards without technical overhead. So the overhead as in the cost of running the server farm. It also encourages decentralization as a wider pool of participants can become validators or delegators, leading to a more secure and robust network. I've already discussed why that is so significant. So the ecosystem growth and community-centric model. PulseChain has an active community that participates in governance. So you like a government, the people govern. They place a vote. And they govern the way the ecosystem operates, the crypto, the layer one, so it participates in the governance. How do you participate? You own Pulse. The ecosystem is designed to be a community driven with the power to vote on protocol upgrades and governance decisions placed in the hands of Pulse token holders. So if there's an upgrade or something they want to change or remove, all Pulse token holders will have the ability to vote. Now, obviously, it's a fair and democratic system in the way that it's weighted by the amount of Pulse you own. This is fair because you've got more skin in the game. But it also means that there is two choices. So not one entity holds the most. If you group a whole group of small entities together, they also get a choice. The PulseChain ecosystem is growing rapidly, with many developers and projects seeking to build on the infrastructure due to the cost effectiveness and scalability of the network. So it's stronger developer community, active governance, dynamic and evolving ecosystem, adoption, network effects. So just wait till this starts to mature and people start to catch on how significant this is compared to other cryptos. There is no third party here. It is all just you doing it. So progressing on, the ecosystem Ethereum capability projects. This is the EVM. So the Ethereum virtual machine. So that is how Ethereum operates. So the capability of Ethereum and PulseChain. Well, there is significant differences on how PulseChain operates, but it is a fork, which is a copy of Ethereum, which means everything that was on Ethereum was brought over to PulseChain, and that means that the two can communicate. It also means that the smart contract is there, so all these other layer 2s and all these other meme coins and everything else is there, so you can do exactly what you want to do on PulseChain, changes, upgrades, and everything else within those individual dApps and smart contracts. So this is what they call cross-chain capability and easy migration, especially for developers and dApps, decentralized applications. So why is this attractive? Easily port over Ethereum-based projects. So it's the same. Just jump on over it. It's there. You own it. No one else does. It's not like it's there, but someone else owns it. No, if you own those, you now own those on PulseChain. So you just crack on at a cheaper price. So the potential for higher return of investment for early investors. Since PulseChain is relatively new compared to Ethereum, early investors in PulseChain's ecosystem and tokenomics could see higher returns as adoption and development accelerates. The low cost of acquiring Pulse token today may lead to significant upside potential as the network grows. PulseChain's ability to scale with low fees and higher throughput could attract a large number of developers, meaning that PulseChain may benefit from exponential network effect, similar to those of Ethereum during the earlier years. Exponential. So what does exponential mean? 1 times 1 equals 1. 2 times 2, 4. 3 times 3. Just keeps going exponential. So in the conclusion, why would you choose PulseChain over other layer 1 chains? An investor might choose PulseChain over other layer 1 smart chains for several compelling reasons. Unprecedented scalability and speed. PulseChain offers the potential 1 million transactions per second (TPS) and low fees, making it an attractive solution for high volume decentralized applications (dApps). Low inflation and strong tokenomics. The token emission model is designed to encourage long-term staking and suitable inflation rate, helping avoid the excessive dilution that can occur in other chains. Delegated proof of stake, DPoS flexibility. PulseChain's DPoS system allows for efficient validator selection and low barriers for entry for passive investors, promoting decentralization and network security. Attractive ecosystem and EVM capability, Ethereum virtual machine. PulseChain's ability to support Ethereum-based applications and its attractive developer community give it significant room for growth and adoption. Investor-friendly, low cost and high reward potential. PulseChain's low fees and scalable architecture, coupled with early stage growth potential, could offer substantial rewards for investors willing to participate early in the ecosystem. Given these factors, PulseChain provides a compelling alternative to other layer 1 blockchains, especially for those looking to capitalize on scalability, low fees, and the growing ecosystem. So there it is. It's all from GPT, AI, it's all smart. They're saying it, it's clear as day. You know, there's 5 here, 5 key points. You can read them for yourself. And the PulseChain ecosystem is still very young. It's not several years like Ethereum. So from learning all that and knowing the significant difference of delegated proof of stake, but it doesn't stop there is other levels. But you can see from the delegated proof of stake and the parallel versus linear is that because it's parallel, you can do multiple blocks, but also you can do multiple transactions. So it's not just waiting for one, doing the next and doing the next. It does multiple transactions as long as they're not interfering with the actual individual transaction. So it's actually designed to sense if this transaction is not connected, then it will go in and go, right, that's got nothing to do with this transaction, I'm going to start doing that. And that's called paralleling instead of doing in series, waiting for one to do the next to do the next. That's why the speed is so fast. Now, from this point, and I spoke about this in the very beginning, and it's why PulseChain is freedom of speech and freedom of association of software. Right, so why is that now significant after you've learned all that? Let's get back over to ChatGPT and see what it has to say. PulseChain is considered the most democratic cryptocurrency because of its delegated proof of stake DPoS system, which is designed to be more inclusive, transparent, and community driven compared to other blockchain networks. Here's why PulseChain is seen as the more democratic crypto. Delegated proof of stake and decentralized governance. PulseChain's consensus mechanism is delegated proof of stake consensus mechanism, which means Pulse token holders have the power to choose validators by delegating their tokens of validators and trust. Okay, we've already spoke about this, but there's the main one. The voting system. The voting system is PulseChain lets every token holder participate in governance by delegating their Pulse tokens to the validators, as validators are ones who propose the validated blocks. Okay, so this also allows token holders to influence decision making. So there we go. So this is upgrades, changes to the cryptographic code, and this is also completing the blocks and transactions. Two main pillars. Unlike traditional proof of stake systems where only validators with a large amount of stake tokens have a say, PulseChain DPoS is more democratic because even smaller token holders can participate by delegating their tokens to a validator of their choice, giving them voting power. Also, that means they get part of the rewards. Why is this democratic? Token holders' voices matter. In PulseChain, the majority of participants, rather than just those with a large amount of capital, have a say in the network's governance. Let me say that again. In PulseChain, the majority of participants, rather than just those with large amounts of capital, have a say in the network's governance. This democratized decision making in a way of mining-based consensus, in a way that mining-based consensus mechanisms or pure POS mechanics often fail to do so. So it's saying that the way the other mines, the mining proof of work, and also other proof of stake mechanisms, they fail to address this key point that everything should be the token holder's decision. It should be freedom. It should be decentralized. It shouldn't be you own this, and then all of a sudden, other people not relating to it, they have no skin in the game, no finance invested. All of a sudden, they're making decisions over your investment. Now, if you've ever seen that, those decisions made on a company that you've invested within shares, yeah, it hurts. It really does hurt. And you're going, why are you making these decisions? Why are you printing all these extra company shares and diluting the market? And all of a sudden, my investment is a quarter, just an example, a quarter of what it used to be. What's going on here? You've got no power. Yes, obviously you can try and vote at the meeting, but it doesn't really mean much. You're just a vote. So let's get back to here. So we talked about token holders' voice matters. And why is this democratic? More representative voting. The ability to vote with token holders means the network governance is based on the will of the community. The community is ultimate, not just the biggest stakeholders or centralized entities. Yep, You don't want someone else controlling it. You want it just to be there. It's written. You know what it is. You know how it operates. And that's how it works. Not all of a sudden, oh, something was changed in the background. Oh, great. Now, oh, yeah, that was good. Validator selection based on stake. The PulseChain validators can choose the amount of tokens delegated to them. Sorry, let me say it again. In PulseChain, validators are chosen by the amount of tokens delegated to them. So we've done that. We've talked about that already. So we talked about how they can delegate their votes. Why is this democratic? Leveling the playing field. With PulseChain, there is no fixed number of validators. Like in some other networks, there is no need for huge upfront costs to participate. Even smaller token holders can play an effective role, meaning everyone has the opportunity to contribute to the network security and governance. So, what does that mean? So you have the validators, and then you have the validators and the oh gosh. You have the validators, and you see sometimes when you're live you forget. It just goes from your mind, but I'm sure you're all aware of what I'm about to say. It is the validators and the delegators. So you have the validators with their own individual, because you need a minimum amount of pulse to become a validator, just like you do in Ethereum. So they might, just start up and they have some money and they've got a fair bit of pulse, but they might just have the minimum, the greatest. They've put all their money into the computing power. And then the delegators come along, they go, wow, you've actually got a pretty good setup. I'm going to allocate and stake and delegate my tokens to you. Obviously, they still own them. They just delegate them to, they vote the validator up, and the validator, because of its amount of pulse it has, its staked to, and the amount it has, and also the quality of its network, boom, it gets allocated the right to complete the transactions and also complete the blocks. But it doesn't mean that is the sole validator. Because this is such a genius network, it's allowing multiple validators to do the task. It's not just all bottlenecked with one, it's called parallel now. See, just think of this parallel and series. Multiple, it can even look ahead and start to complete transaction and blocks ahead of the block that's about to complete to further speed up. And this is why it's exponential. This is unbelievable stuff. You're not waiting. All right, now this block's going to get done. Now I can do it. No, it's already doing it well ahead of it. Technology, mate. This is brilliant stuff. You've got to hand it to these coders and mathematicians. This is not just your simple algebra, mate. This is wow. Yeah, you got to hand it to them. Right, let's get back onto where I was. Validators, democratic. We're talking about. Okay. Incentivization for stakeholders and delegators. Okay. So with this as well, it's not like the delegation to. It's not like the validator is just voted up and all of a sudden it's doing this. You're like, oh, there might be questions. It's like, well, why? It's like, you vote someone in to control everything. You're like, well, how did they get the vote? Where did these votes come from? It's all on chain. These delegators, it's showing, okay, this delegator, which has this unique address, has this amount of pulse, and they're delegating this to that validator to complete it. It's all open. You know exactly what's going on. Also, within that unique address, you can see the history. So the delegation process is transparent, and delegators are free to choose which validators to support based on the factors like performance, reliability, and values. So it's just saying, like, at any moment, the delegators can go, no, mate, I don't like what you're doing. And you're not cutting the cheese, you're not cutting the mustard. my delegation gets moved from someone else until you improve yourself and address the situation, which is the way it should be. Real quick. Nah, mate, you've got some, no one's perfect, but improve. If you don't improve, you're out. So delegators, so why is this democratic? The delegators can participate in decision making by delegating their tokens every participant, regardless of the amount of pulse they hold. Okay, it's really saying the above mentioned. So we've talked about voting and governance. Why is it democratic? Well, it's obviously it's more decentralized, obviously, because it's not. So you got to get used to this word: decentralized and centralized. Centralized mean it's a entity that has it's doing things which you have no real input on. That's called centralized. Decentralized is whatever it does is purely from your input. So there you go, straight on to what I'm talking about right now. No centralization, control, or authority. One of PulseChain's key features is its focus on decentralization. The network is built to be resistant to censorship and centralized control. Oh, round of applause just right there. Resistance to censorship. It can't be bribed or given, special little packages. Ensuring that no single entity can dictate the network's decisions. Unlike some layer 1 blockchains where governance is heavily influenced by a small group of developers or large stakeholders, PulseChain emphasizes that control should lie in the hands of the community. Yeah, mate, I agree with that one. Rich history of blockchain decentralization. PulseChain's architecture and design promote a community-first approach where everyone has a role in securing the governance of the network. Well done, Richard Hart, mate. Yep. Just taking this to consideration, you're like, crypto's been around before, but it's still very new in the aspects of fiat currencies, world currencies, bonds, and precious metals. This is the first one that's really, I feel, has really taken out, and he's got so much hate, and you can see why. I mean, like, there should be only support for this. Where is the other people, the major players pointing out this? Maybe they just don't know. Surely I'm not the first person that's looked into this and truly read and spent a little bit of time researching this. But if I have, well, I'm so glad to bring this to your attention. So 41 minutes in, guys. You see what I mean? There's so much. I'll try and condense this as much as possible, but there's just a lot here, and you should be aware of, I feel really aware of what is this. And if you understand this, you're going to understand so many other cryptos. So I'll continue on, and I feel like I'm going to I'll dive more into what else PulseChain is about, but we'll just continue on this as this nearly finished. Why is this democratic? So no central authority. Decisions are made by the community as a whole, not by a central team or a few large players, thus avoiding the centralization of power, even in many other cryptocurrencies. Inclusive. This type of decentralization governance means that PulseChain is potentially more resistant to censorship and more inclusive of diverse community members. So what it means by community members is that applications, stamps, smart contracts, that's what it means. It's not restricting you to a certain type. Lower barriers to entry for participation. PulseChain's DPoS, remember that, delegate, proof of stake, not just a proof of stakes system. So DPoS system allows validators to participate in a relatively low barrier of entry. Validators do not need vast amounts of capital or infrastructure to run a node. Remember what a node is? Run a node, making it easier for individuals or small entities to participate in the network's operation. So PulseChain is much cheaper. So it means that you do not need as much. So this ranges all the way from the simple person that's just a battler and a struggler, all the way up to someone else that is gifted with large amounts of wealth from either hard work, inheritance, a bit of luck, wherever it may be. They have this wealth, and it's also down to the simple person that's just starting out, whoever made hard times or wherever it may be, and they've just got this small amount of money. Everybody counts, not just the ones with the vast amount of money. And that's the way it's always about. If you want to give it a go and work hard, you get rewarded, and that's how you get rewarded. This is how you get rewarded. Small token holders can easily delegate their tokens to trusted validators for increasing the decentralization of the network and now allowing for more participants to take part in the governance. Why is it the democratic accessibility? By lowering the entry barriers. So we're just saying, look, anybody can enter. PulseChain provides opportunities for everyone, not just the wealthy or technologically advanced. So yeah, so it's made it easy for everybody to participate. It's securing the governance of the network. All right, so we're just getting through it, and here's the summary of why it's the most democratic, why PulseChain is considered the most democratic crypto in the whole crypto space, everything, all of them, even Bitcoin. Inclusive governance. PulseChain allows all Pulse token holders to participate in the governance process by delegating their tokens to validators for their choice, giving them a say on how the network operates. This ensures the governance power is distributed and not controlled by a small elite group. Equal access for all token holders, this through the delegated system, and then small investors, because the voting power is democratized. Decentralization and it's community driven, because everybody can vote on key practical decisions, and the lower barriers for entry of it because it's cheaper. So by focusing on decentralization, community participation, equal opportunity for token holders, PulseChain provides a platform that aligns with the principles of a democratic society. Let me repeat that again. By focusing on decentralization, community participation, and equal opportunity for token holders, PulseChain provides a platform that aligns with the principles of a democratic society. It is designed to ensure that everyone can have a voice in how the network is governed, making it an attractive choice for investors and participants who value democracy in their digital economy. I want to repeat that again. I love repeating this. This is just gold. It's just gold. It is designed, PulseChain, it is designed to ensure that everyone can have a voice in how the network is governed, making it's an attractive choice for investors and participants who value democracy in their digital economy. Straight from ChatGPT, everybody. Yeah. And this is why it goes back to X platform. Thank you, Elon. And this is Richard Hart back in April the 10th of April, 2024. He's saying PulseChain is freedom of speech and freedom of association of software. This is the reason why he's saying. And I hope every bit of legal representation for Richard Hart is looking into this and states this. This is why. Power to the people, mate. Power to the people. And if you're, yeah, just really good people, you know? Everyone wants to be a good person and progress in the society and makes it better. And this gives you the opportunity to do it. Right, so fair a bit of information there. We're how long are we in? 47 minutes. So yeah, that's probably a lot of information for you. What I'm going to do is just give you a little bit of a break from that. There is more, but just give a break from that. Let's just jump over to the charts for a bit. So look at this. This is wrapped BTC/DAI. So this is a trading pair on PulseX. PulseX is the decentralized exchange on PulseChain. Richard Hart and the community also created this. There's more to get into that, but I'm going to do that another time. So how is the BTC, so the wrapped Bitcoin that's brought over onto the PulseChain network? and there's a pair of trading to DAI. DAI is like a USD value similar to USDC. It's just I won't get into DAI, but it's just a lot of stuff securing a price, a set price. Very good. Anyway, so we're looking at here what's happening with Bitcoin. Oof. What is going on? Did it punch above it? Did it punch above it? Now this is significant here. It needs to punch above it. Just short. Just short from what I can see. Just short. Now, we'll see what's going on here. Looks like a W, which means it's positive. Yeah, we'll see what happens. If it doesn't punch above it, could be going to the downside. But we'll see. We'll see. Only time will tell. But still, 103,000 US dollars for one Bitcoin. Impressive. Yeah, very impressive. Yep. Okay, jumping over. Let's look at Ethereum. And the pair here is wrapped BNE, Binance. Wrapped Binance, this is the pair at the moment. Ethereum versus Binance. ETH wrapped BNB. What's happening with ETH at the moment? ETH has been struggling quite a bit, hey? This looks like head and shoulders. Let's see how this travels along. Could be a bull flag. Can't tell. There's a lot happening on this. Did it slightly jump above? Attempted to. Yeah. Unknown. There's a lot of volume here. There was a lot of buying volume. More selling than buying at the moment, but it does look like a bull flag, so see, this wasn't healthy. I'm surprised that popped up, but it did. So we'll just see what happens. Has dropped above this wedge. Yeah. Unsure. Ignore it. What a word to say. The new US president is about to come into office. So there's a lot could be signaled through this. We'll see how the market sentiment is progressing, but there was a positive sentiment with now some selling off. All right, jumping over to PulseX. Wait a minute, where is? Oh, PulseChain's not here. Let's do PulseChain before we go into the others. Price. PulseChain, there we are, wrapped Pulse. Let's do wrapped Pulse USDC. Boom. Healthy, selling off. Personally, from what I can see, head and shoulders. We'll see. But this is a positive level right here. Right here. There's a lot going on in the Richard Hart, the PulseChain ecosystem. So Richard Hart's just getting through a legal battle. Surprising how that legal battle ever got progressed to the course, but it is. And he's got an amazing legal team, the best legal team in the world, from high level opinions. So we'll see how it progresses forward. But in consideration, this is with the sacrifice levels. So. And it's 50% off sacrifice, so it could be considered a very good buying opportunity. But yeah, it does look like a head and shoulders, but we'll see. We'll see how that progresses forward, and if that touches this line, and maybe it will go higher. Who knows? But if you just a bit of an idea what. So it's very young. See, 2023, May 2023. It's still young. Woof! Look at it up all the way to here. Oh my gosh. All the way up to, wow, that buy was that is it a wick or is it a candle? It's a candle all the way up to 10 cents. 4 zeros, 4 8, 10 cents. Wow. All right. Oh my gosh, crypto is amazing. Huh? All right, PulseX, PLSX, and DAI. That's also looking like a small head and shoulders, but this one is actually progressing upwards, so could retest and go. But what you can see is that's the lowest low, and it's all progressing up. The history of PulseX you can see as well. Yeah, it's progressing, it's trending up. It does look healthy. Obviously, it hasn't done them major gains, but if you look at this lower low, that's a nearly 2x, 3x from the lowest low. So still good gains. Incentive token, that's the history of this incentive token, all the way from here, which was May. That was worth $80 for one incentive token. So let's get down and look at it here. It's currently trading. A bit of a pump, sold off, recovered, a bit of a pump. I reckon that's going to soften and carry a trend. $1.70. And we got the two hexes. This is hex on PulseChain. So you can see the pair, liquidity pair here. Trading on PulseX. And this is DAI. Remember, when you see hex and you've got this beautiful background, that means it's hex on PulseChain. Because remember, when the fork of Ethereum was completed, the copy of the state, everything that was on Ethereum got transferred over to we have a little bit of coffee, a bit of espresso. Everything that was on Ethereum was transferred over. So this is the hex, all the hex that was over and it's operating. So this is the hex on PulseChain, or a lot of people call P-hex, but the actual ticker is HEX. So as you can see, woof, they had a bit of a run up, boom. It also looks like another head and shoulders as well, but we'll see. We'll see how that bottoms out and progresses to here, and maybe that just continues as a trend and then launches above this last price. And also the same with hex on Ethereum. So the pair here is wrapped ETH, and yeah, pretty much everything doing the same from the lowest low 0.001. It's actually currently at 0.0026, so 160% gains there. Wouldn't turn your nose up at that, but you can never see, like, there's definitely some enthusiasm in the market and what's going on, how is it progressing forward. And I think I got a positive feeling, but we'll see how it turns out in the next few days, few weeks, what happens with the decision from the courts regarding Richard Hart. If it comes out with some positive news, you watch out, mate. Sentiment will change. Now, if you want to just do a comparison with other cryptos, we can just do here and look out the 24 hours. And Sol looks like it's done a very good gain at the moment. We'll just have a quick look at Sol, just in comparison, something outside of the just on wealth. Yeah, look, look at this. This is mental. But you know, say like not everything runs at the same time, so our day may come very quickly. And look at that. That was like a little sell-off, possible head and shoulders, but it just eventuated and boom, blast off. This is really healthy, really healthy. Broke above the last all-time high, which is what you want. All right, let's have a quick look at crypto bubbles on the daily. Let's go to daily. Let's go to weekly. Yeah, there's PulseChain. PulseChain had 2%, 2.5% of the weekly. Major gains, yeah. Some money to be made there. The monthly, yearly. Yeah, I think there's more than this, but anyway, that's just the crypto bubbles for what it is. All right, that was a bit of fun. Let's just get back to this this information on PulseChain. I'm just going to slowly scroll through this as well, so you can read it if you want to pause it or slow it down as I'm going through. There's not too much more here, but I think it's very, very important that you get an idea of what information and what information is provided to you to learn, and how this operates, how PulseChain operates, how crypto operates now. And the reason why it's good to know this is because generally the real projects are the ones that go up in value. The ones that have real purpose, not just memes. Not to say memes can't go up in value, but especially the layer ones. Just one moment, just checking something out here. Okay, what else can I see here? Okay, so I asked this question: why would you choose? Why would an investor and developer choose PulseChain over Ethereum and other layer ones? Well, as you know now, low transaction fees. So, and this is referred to as gas fees. Ethereum suffers from relatively high transaction fees, even when it's progressing to proof of stake from its proof of work consensus. Why does this matter? Lower fees allow developers to create dApps with more predictable costs for users, which is essential for mass adoption, especially if you're running a game or something like that. They're a bit of aware that if it does increase in value, it's going to increase in a predictable manner. You're not just waking up one day and go, oh my gosh, it's dollars instead of cents. Also, if you want to complete a lot of transactions, you want low fees. So the next reason is faster transaction speed and scalability. So despite transitioning to Ethereum 2.0 proof of stake, still faces scalability issues, especially during periods of high network demand. The network processes a limited number of transactions per second, TPS, which can lead to delays and higher fees. PulseChain doesn't suffer this. And why does this matter? Because it's attractive for developers creating performance-sensitive applications, including DeFi protocols, NFT platforms, and games. So how does a layer one become adopted more and become more popular? And then therefore, people need to own the layer one token, the core token. And because of that, then scarcity comes along and a little bit more use, and then that drives the value up. Obviously not crazy value, but it does drive the value up. The environmental sustainability, energy efficient. So this is the issue with proof of work versus proof of stake, and then furthermore into what PulseChain's system is a DPoS. Remember that? Delegated proof of stake versus proof of stake. So although Ethereum's transition to proof of stake with a merge in September to 2022, significantly reducing its energy consumption compared to proof of work, Ethereum still requires a large number of validators and staking activities to secure the network, which may not be as energy efficient as PulseChain's approach. PulseChain design seeks to provide a more energy efficient solution since it operates with its own proof of stake system. It's actually delegated proof of stake system. It requires less energy and resources to maintain compared to proof of work networks or even Ethereum's pure pre-merged proof of stake setup. Why does this matter? Well, we always want to progress to using less energy, or what energy we do use is more efficient, so we can allocate that energy for something else. Why be wasteful? And because of that, then it speeds up the network purely because of that reason. So the full system state copy, forking Ethereum. While Ethereum has a rich, mature ecosystem of applications, the migration of process of assets or dApps from Ethereum to other chains typically requires rebuilding or rewriting contracts and transferring assets, which can be time-consuming. Well, because there was a complete forking of Ethereum, a copy of stake of 1-to-1, everything that's on the Ethereum's chain is now on the PulseChain, and the Ethereum holders acquired a one-to-one copy of the Ethereum token, core token. This is usually called a snapshot. Why does this matter? It enables Ethereum developers and users to seamlessly transition to PulseChain without having to redeploy contracts or mitigate assets manually. It can provide immediate liquidity, usability, and application support, making it easier for developers to reach new audiences on PulseChain. Ecosystem support and community. Obviously, if you're new to the Richard Heart ecosystem, or you have been there for a while, with it for a while, you know there's a very rich community in all aspects, from holders, promoters, developers, and just general people. There's so many people you can rely on, and generally the known reputation of Richard Heart community is that everybody will help you. There'll be someone to help you out. You won't be stuck. And this is very important. What makes a crypto popular and acquires value is a community. You got a strong community with many members. That's where the large players want to go. Pre-existing tokenomics and rich ecosystem potential. So Ethereum's tokenomics, while well established, can sometimes limit its flexibility in terms of its incentives for certain user cases, e.g. gas, staking rewards, etc. PulseChain's tokenomics are designed with a heavy emphasis on deflationary aspects, with a significant portion of its tokens being staked or burned over time. Additionally, PulseChain's native token PLS and the PulseX decentralized exchange DEX, that's what DEX stands for, further contribute to its ecosystem growth by offering more ways for users to participate in the network, earn rewards, and gain exposure to PulseChain's growth. So progressing down, you can read this for yourself. Lower fees means higher scalability and eco-friendly design, not burning up energy. It's already established because it was a fork of Ethereum, so everything that works well on Ethereum works on PulseChain. So that means it already has a maturity adoption. And why does this matter? For developers, investors looking for new, potentially high growth in blockchain, with a dedicated leadership team and community support, PulseChain offers a promising alternative. However, Ethereum's maturity still remains a significant advantage in the terms of ecosystem size and liquidity, obviously, because there's more liquidity, more money in the Ethereum ecosystem. But hey, only a matter of time. And this is obviously expected there to be more liquidity. It's operating longer than Ethereum. That's what happens. Give it more time. So the conclusion, why PulseChain offers several advantages of Ethereum and other layer 1 blockchains include lower transaction fees, faster transaction speed and scalability, environmental sustainability, a full system state of a fork of Ethereum, strong community support, and deflationary tokenomics. So why is it deflationary tokenomics? Okay. So what is the inflation and deflationary? So when you're investing into a layer 1 or something similar, you want to know what aspect is there? Is it inflation or deflation? Inflation means, just like inflation of money, inflation means more is generated, more tokens are generated, which means because more is generated, it means price dilution. So the amount of wealth in the ecosystem is diluted to more holders, which means that the price goes down. If it's deflationary, that usually means it's reducing the amount of supply, the amount of pulse out there, so that means that the wealth is distributed to a small amount of people. Now you don't want it to be too small, because then you have too many fluctuations, and that's what PulseChains have done a really good job about. There's a high supply, but it's actually, we're going to talk about this more on why is inflation and deflationary. So the inflationary aspects of Ethereum is that even though it does have an inflationary state, with its upgrade, it's actually it's becoming deflationary. So the inflation aspects and the annually yield is 4 to 5%. So that's 5% of the whole amount, the whole supply of Ethereum is created. And that's from making new blocks. But that becomes deflationary from the EIP 1559 burn mechanism. So what that's doing, if that's on Ethereum we're talking about now, so it's a base burn fee. So it's taken a portion of the fee, which the validators charge the holders that want to complete a transaction, takes a portion of that and it burns it. And this burn amount will depend on the network congestion and transaction activity. So we get on to how that is similar to PulseChain, and then I'll explain what that means. So inflationary, which is block awards, so the proof of stake. So like the proof of stake model for Ethereum, the validators are rewarded with newly minted PulseChain tokens for securing the network. So securing means completing the cryptographic algorithms and so that's creating the blocks, which is comprising of transactions, making those. You got to be rewarded for doing work. And the other inflationary is also the staking rewards from the ones that are staking to vote up the validators. They receive a portion. We've discussed this, remember? So this is an inflation. Now, how does it become deflationary? Well, what it's also done is it takes a portion of the, similar to Ethereum, takes a portion of the fees and it burns them. It also takes a portion of the fee from the PulseX exchange and uses that to burn. So it actually has two types. And even though that there is inflationary creation of Pulse, it becomes deflationary because of the burning, the buy and burning, and also because of the staked Ethereum from the validators, sorry, the staked Pulse from the validators and there's me forgetting the name again, the Delegators, the Validators and Delegators, because they are staking that and allocating it to the validator, it's locked up. That means that the circulating supply is decreased, which means further deflation. So the aim for PulseChain is to be deflationary over time, especially in transaction volumes. So what also happens is that each block creates a certain amount of pulse. Well, if you've got more transactions, because obviously there's more transactions within a block, and if that increases, there's going to be more buy and burn of the pulse, which further is decreasing the amount of supply of pulse. Pretty cool. So here's a little graph here, and it's saying Ethereum, PulseChain, comparison, inflation, deflation. Pretty much everything I've talked about. The conclusion, yeah, even though Ethereum is doing a good job with this EIP 1559 burning mechanism, PulseChain is doing an even better job. So I want to know more about the architecture and consensus mechanisms. And this is about parallel and serial, and I discussed this before about the execution. If you're still with me and it's hour 12 minutes in, well done, you're going to be rewarded with vast amounts of wealth. Also, you're going to be a person that's well educated on how cryptocurrency works and blockchains work, which further means your knowledge can expand beyond the standard person. So we're talking about architecture and consensus mechanisms and execution models, parallel versus serial. So parallel is PulseChain, serial is Ethereum. So if we want to understand this architecture, we've got to dive into these below explanations. Ethereum architecture and consensus mechanism. So it uses the Ethereum virtual machine, which is decentralized. and churning complete runtime environment that executes smart contracts. So the Ethereum virtual machine, EVM, completes and executes the smart contracts. So the consensus mechanism, which is now merging to proof of stake. It was proof of work, but it's merging onto proof of stake. So this gives it a better scalability, security, and sustainability. So I want to talk more about serial execution. Here's the goods. Here's the juicy part. So Ethereum's serial execution compared to PulseChain's parallel. Serial execution. Ethereum's execution model is serial, meaning that the transactions and smart contract computations, how it completes it, are executed one at a time in a sequence as dictated by the order in which they are included in a block. Each transaction must complete its execution before the next can begin, which limits Ethereum's throughput. Whoo! Single-threaded execution. Ethereum currently processes each transaction in a single thread, where smart contract execution is done in a linear sequence order. This means that transactions can become delayed or expensive during periods of high demand, as every transaction waits for a previous one to complete. So obviously they get backed up, and then you've probably noticed that it gives you sometimes an allocation to pay higher gas fees so that you become ranked further up in the order and then get your transaction completed before other transactions so that you can be included into that block. Serial. Even though it's very good, this is the issues. Why serial execution is significant. Scalability constraints. The serial execution model creates inherent scalability limits for Ethereum, particularly during high network demand and congestion. This is because the network can only handle a limited number of transactions per block. And as transactions pile up, the gas increases. Complexity of smart contracts. Ethereum's execution model is suited for decentralization and secure execution of smart contracts. But this comes at a cost of scalability. Each transaction involves state changes and updates, which require sequencing processing to ensure consistency across the network. So remember I told in the last video about how there's different abilities for nodes, so they didn't have to be just Golang. They could be other ones apart from Golang. This is where it make a key point that because PulseChain has just used Go language for their nodes, it has a better sequencing of processing. PulseChain's architecture and consensus mechanism. So the architecture is energy efficient because it was a full fork, and the PulseChain virtual machine (PVM) versus the Ethereum virtual machine, which is the EVM. So PulseChain virtual machine (PVM), which is a modification of Ethereum's EVM, ensuring capability to existing Ethereum-based smart contracts. So it's saying that we've upgraded the virtual machine, but everything that's on Ethereum can operate on PulseChain. State management. PulseChain uses similar data structure to Ethereum, the Miracle, for state management, but optimizes it for better performance, scalability, and low latency, low delay. Account model. PulseChain also follows account-based model similar to Ethereum, but with improved mechanisms that allow for a higher throughput and true transaction costs. So PulseChain consensus mechanism, the proof of stake, which is actually DPoS. They just keep dropping that and forgetting to say it. The validator selection. Validators are chosen through they're just chosen by others. The block validation, similar to Ethereum, PulseChain block validators can check the validity of proposed blocks. So I'll just do this again, repeat. Sorry, guys. So what it's saying is that it can it checks out the blocks and then orders them, and also that because it centers them in the future, it can start to process them. So it's trying to optimizing it on the consensus protocol and reduce the delay times. So it's trying. PulseChain's goal is to be infinitely than Ethereum. So he wants to be faster. So the parallel execution, here we go. Parallel execution versus linear. This is what I wanted to get onto straight away, but you know. PulseChain employs a parallel execution model where transactions can be processed in parallel rather than serially. This allows PulseChain to handle many transactions concurrently, which dramatically increases its throughput. Multi-threaded execution. Boom. Now, if you're a coder, developer, this is the stuff. This is for those with sensitive ears. This is the shit. Pardon my language, choice of language, but you know, this is what you gotta say sometimes. This is the shit. Parallel execution, multiple threaded execution, parallel smart contracts. So the multi-threaded execution, unlike Ethereum, which processes transactions sequentially, PulseChain's execution model enables transactions and smart contracts. PulseChain execution model enables transactions and smart contract operations to occur in parallel across different threads. This architecture is optimized to scale efficiently, especially for the dApps and protocols and require high throughput. So it's saying that the dApps and protocols that require high throughput, so they can't have delayed confirmation. You need it straight away for it to operate correctly, so that whatever major in the game wants to confirm that you've obtained something, so it needs to have a confirmation back. You don't want to be hanging around or a delay to know, okay, you've, whatever it is, maybe you got this sword or you've got this coin or wherever it may be from that perspective. And the parallel smart contracts on PulseChain, multiple smart contracts can be executed concurrently without waiting for one another, reducing the time required for process blocks and improving the transaction throughput. So this is what I was talking about in the very beginning. So it's doing multiple things at the same time. This is genius. This is brilliant. I'm surprised. This is just must be the stepping stone, because this is just fucking genius. It's allowing multiple things at the same time, and it's doing preparation for the next block. Brilliant. And because it has different threads, so it's doing different transactions, not one after the other. It's going and it's assessing. It's going, this transaction is not anything to do with that. Where's my hands here? This transaction is nothing to do with that transaction, so we can do this separately. Brilliant. So why is parallel executions significant? High scalability. The parallel execution model allows for PulseChain to process many more transactions in a given time window compared to Ethereum. This dramatically reduces the congestion and can keep transaction fees lower even in the network activity, even if the activity increases. So it keeps the fees lower even if the activity increases. So it prevents high fees and doesn't delay it either. Improved throughput. Parallel execution increases the number of transactions that can be processed per second, TPS, enabling PulseChain to achieve much higher TPS than Ethereum. This makes PulseChain more suitable for high frequency applications such as gaming and microtransactions and large-scale DeFi protocols. Efficiency and speed. By executing smart contracts and transactions in parallel, PulseChain achieves faster transaction confirmation times. This leads to more responsive and usable blockchain, especially for applications that require low latency, low delay. This is brilliant, eh? PulseChain, mate. If I had a top hat, mate, I'll be tilting my top hat to you, Richard Hart, and the team. Well done. So this is a nice little table in the comparison between Ethereum's serial execution and PulseChain's parallel execution model, transaction throughput, scalability, latency, network efficiency, and the cost. Why difference matters. I don't need to go into this, but I'll just scroll through it slowly for you so you never pause it and read it for yourself. It's just because it's doing this, it's not limiting the scalability and the efficiency. It just, for PulseChain, it will just constantly get better and bigger. So let's just do the conclusion between Ethereum and PulseChain here. The architectural difference, particularly for execution model, is a key reason why PulseChain can potentially outperform Ethereum in terms of scalability and transaction fees in the future, while still being fully compatible with Ethereum's existing infrastructure since its fork. However, Ethereum's maturity and vast ecosystem remain significant factors in its dominance. So it's just saying because it's older, and more people are either unaware of how good Ethereum is. That's just why it's become the more significant dominance in the ecosystem between the two. But as time goes and more people learn how good PulseChain is, it will become a more significant and dominant layer one. And really, it already has the maturity because it's a full system stake fork. It's a full copy. So the mature contract's already on PulseChain. So with the validators on the DPoS delegated proof of stake, the 33 validators is the maximum amount of validators that can be operating at one time. Obviously there can be more validators, but these are the ones that are in operation, and then they are voted. So whoever has polls votes these validators in order, and also the amount of pulse they have, so staked for the validator, that then decides who has the ranking to complete the first transaction, and then that gives the more allocation of gas fees. So we don't need to go into validator selection, security and decentralization, scalability. But the reason why DPoS, delegated proof of stake, is so significant is because that's how it's actually achieved to be cheaper and faster, because it's just removed the possibility of a validator somehow having a random opportunity as it does on Ethereum, and then all of a sudden being a very poor validator, which then deloads it or could create a mistake and be nefarious, could create an error in the system, and then all of a sudden losing value. So the reason why it's significant, the key features of a DPoS is the validator selection, we've talked about that, the voting power, we've talked about that, the security. Let's talk about security. DPoS uses economic incentives and penalties to secure the network. Validators who act maliciously, pardon my English there, or fail to perform properly can be penalized by losing their position or part of their delegated stake. However, in DPoS, a small group of validators governs the network, which may reduce the risks related to centralization and conclusion amongst delegators. We've talked about this, but this is the most important part of security, is that the group, everyone that has Pulse, decides if someone is malicious, so then they can vote them out. And plus, if someone is malicious and they are a validator, they can be penalized. So it's all about not being malicious. That's how it becomes. That's how there's a high security, and also there's a track record with the validators. So past history really influences who will delegate their pulse to the validator. So scalability is what I talked about, the speed. One of the key advantages of DPoS is the scalability. With a small number of validators, the network can achieve higher transactions throughput and low latency compared to the PoS system, Ethereum, where blocked validators is done by a larger and more distributed set of validators. And here's a nice graph here. No graph, sorry. A block. Showing Ethereum's PoS and PulseChain's DPoS for its 33 validators. Validator selection, number of validators, decentralization, voting power, security, scalability, transaction throughput, latency, governance, and cost efficiency. We've discussed all of those. So I can zoom straight through that. Now let's talk about the speed. Because I feel like you're quite up to date now. So I'm just scrolling here so you can have a gander. We've talked about the voting mechanisms, validators, delegators. Yeah. With the they're using this word in the DPoS validators, a word when the responsibility is witnessing. That's an awesome word to use for ChatGPT to say that you participating in the transactions and the blocks being created are witnessing it being done firsthand. You can see what's happening, and because everything is open chain, you can dig into the history. It can't. The history can never be erased. You know exactly what's going on, who voted in, how many people did. We've talked about the delegators, but here it is. You can read this yourself. It's just doing a comparison between how Ethereum does it versus PulseChain. We've already covered this. Voting mechanisms. We've already done this. Okay, there's a nice table here. Key differences. The validators, delegators, voting power, governance, security, incentives, centralized risks. Conclusion. Let's read this conclusion. Ethereum proof of stake emphasizes on a more decentralized approach where validators are selected based on the stake and delegators have indirect influence through staking without directly voting on validator selection. Governance is held through community consensus and developer-led proposals. So this is all random. With Ethereum, it's all random selected. Even though that you have a high possibility of being random selected to complete the transactions and blocks, it's still random, and it just goes by how many Ethereum you hold as a validator. The issue with that is that you could do something bad, and there's no tracking of how well you do. Just that if you do something wrong, then they'll say, okay, you're doing something wrong. But if you want to constantly say, like, vote on like your performance, it's like rewarding you in the workplace or how you are in life. If you do really well, you usually get rewarded. Why not have that in the blockchain? And that's what PulseChain has done here in a DPoS, delegated proof of stake. So the delegators have direct voting power on who the validators will be ranked, how the validators will be ranked, and the influence on their governance decisions. So this obviously it's saying it's a little bit of centralized power, but it's decentralized centralized power, if that makes sense. It's saying that, yeah, obviously we're centralizing it, but we've voted in, and we can take that away anytime we want. So also I wanted to, so I'm interested to know about the theoretically upper bound transaction possibility per second. And with Ethereum, Ethereum has claims that it could get to. Now, once I get straight to Ethereum, I'll come back to PulseChain because it's. Well, let's just go to this table then. So the transaction throughput, TPS, for PulseChain, it's 100,000 transactions per second, and that's in a practical, so not overburdened. And theoretically, it can go up to 1 million transactions and beyond per second in one block. My gosh. Currently, Ethereum has 30 transactions per second, and that's on the proof of work, and then progressing into proof of stake, it's hopefully going to go to 100,000 transactions per second with the sharding and the roll-up. So that's all the upgrades it's doing. This is significant. I'm not shitting on Ethereum. It's still doing really good, but wow, 100,000 practical at the moment right now, and it has bounds estimates of 1 million transactions per second and progressing from there. And even in the current 100,000 transactions per second, the block time is 2 to 3 seconds. So every 2 to 3 seconds, 100,000 on average transactions will be completed. Whereas every 12 to 14 seconds on the Ethereum network, 30 transactions per second. Oh my gosh. Oh dear. So because of that, the gas fees are lower, obviously on PulseChain. Block sizes, throughputs, yeah. Okay, I want to know more about the total supply, but it actually gave me a pretty good breakdown on the current price for transactions. So I'm just zooming through here because it's very in depth. I just want a this is old ChatGPT giving more information that I really require. It's good, but it's not more direct because I want to know about simple and complex transactions. And here it is. They did well here. Nice one, ChatGPT. Just finally gave me the information I wanted. So here is a brilliant breakdown table of the transactions. So the base fee, it's for PulseChain, it's very low. So we're talking about cents, and that's for a simple transaction, and that can be even in the pennies. Whereas for a complex transaction, it's in the cents. And worst case scenario, I have never seen it, but it could get to a couple of dollars. But it will always remain to the cents or pennies. For Ethereum, on a simple transaction, you're looking around on average to $1 to $5 under normal conditions. And then on complex transactions, in low congestion, so remember this part, low congestion. So when not a lot of people are wanting to complete transactions, and this is either by the dApps or the applications, smart contracts, or people buying and selling. This means in a complex transaction in a high environment, $10 to $50. Now, if you're an OG or you've been around one cycle and you're on the next, it goes well above that, even on the simple ones as well. So the complexity impact, minimal due for the high throughput. So they were talking about the delay. So even on the simple transaction, it's minimal and it still has high throughput. It still has, on the complex transaction, it may be higher cost, but it's still much lower than Ethereum. And obviously with Ethereum, it's beyond that. The congestion, this is interesting. This is very important here. Network congestion. So on low On low, simple transactions on PulseChain, it has a minimal impact due to its high throughput, and complex transactions on PulseChain also has a minimal impact because PulseChain can handle large volumes. Whereas Ethereum, the simple transaction, has sustainable impact. Sustainable impact. So it means that it will have an effect, and this is due to the price. And then when it has complex transactions and the network congestion, it's going to be sustainable impact due to congestion. So both times it's saying, just in general, because this is a more older network that's upgrading, it's still doing a great job, but has congestion, and this will mean it'll be slower and it's going to cost you more. So gas efficiency, high efficiency for Ethereum, it's moderate to low. Block time, here we go. So it's always for Ethereum, for PulseChain, for PulseChain, it's always going to be around 2 to 3 seconds, even for the complex transactions. For Ethereum, it's always going to be 12 to 14 seconds. And that's the same with the speed. For PulseChain, it's always going to be high, and with Ethereum, it's going to start to be low to moderate for the simple transactions, and for the complex ones, it's going to be low. It's just going to slow all the way down. It's just not possible to do true complex games, DeFi, dApps on Ethereum anymore, purely for this reason. You can do it, but you just got to expect the delay, and everyone that uses it has got to take into account delay, which is, oh man, it's hard sometimes when you want to work quickly within a time frame to get stuff done. All right, guys, it's an hour and 40 minutes nearly. Well done for all being here. So I haven't got too much more to go through, but we've discussed all that, so we can zoom and go straight for all this information. We've talked about validators, validators, and delegators. We've talked about how the rewards for validating and delegating are rewarded. Just quickly, with a validator on the PulseChain network, obviously here we get a percentage purely for the infrastructure, and then a percentage for his owned Pulse coins, and then the delegators would get a percentage of that as well. So we're talking about the fees and the generation, transaction fees and block rewards. That's how it gets delegated. That's how it gets issued. Boom, boom, boom. So the conclusion on that, PulseChain offers a simpler, more direct approach for staking and delegating, with low entry barriers for validators and predictable rewards for both validators and delegators. Ethereum proof of stake model involves higher minimum stake requirements for validators, but also provides significant rewards for participation. Delegators, on the other hand, typically use staking pools, which adds a layer of intermediary fees impacting the overall yield. So what it's saying there is that with the PulseChain, you need, what was it, 32 million Pulse, which is roughly $2,000 US dollars, whereas for Ethereum you need 32 ETH, which is nearly $1 million US dollars. So who can afford $1 million? Well, not the average clan. So what it's saying here is that you have to group together in these staking pools to try and achieve the possibility of the validator to achieve the ability to complete the block and transactions. And because they're in these pools, that means intermediary, which means third party, are getting fees for this, for creating the ability to be in the staking pool. This is for Ethereum. And this is why PulseChain is the superior blockchain. We've talked about validators. So with the comparing the maximum number of validators for PulseChain and Ethereum, the maximum validators, there is no hard limit for the amount of validators to qualify as a validator. With Ethereum, on its post-merge, that's going from proof of work to proof of stake, approximately 3.5 million theoretically. So that's a lot. That's a lot of nodes and validators, but it's just saying that obviously there's a maximum amount you can get there. Yeah, but still no hard limit. That's awesome. Power to the people, power to the individual, power to the AI. So this is, and that's because of this scalable architecture, the PulseChain architecture, how it was designed, created, thought through. A lot of time was spent here. A lot of time was spent to thinking over how to improve. Love that, you know? How can I improve things? Why not improve things? Okay. And I think we're getting to the end of information here, guys. We're getting to the end of it. I told you, eh? We could only do PulseChain today. It's a lot of information. And we're just scrolling down. We've already talked about how the rewards for completing the transactions and creating the blocks is distributed. Here's a little graph here. So graph table. All right, there we go, guys. There we go. So let's just get back on to rehash this. Why would an investor choose PulseChain over other ones? Let's just get back to the... Wait, let's do the very bottom, actually. I did... Yeah, here it is here. I'm just scrolling up. Here we go. It was conclusion. Let's just read this again quickly. And then that's it. That's all about all the information from ChatGPT regarding PulseChain comparison to other smart blockchains, especially Ethereum. Conclusion: why PulseChain over other? Why would you choose PulseChain over other layer 1 chains? An investor might choose PulseChain over other layer 1 smart chains for several compelling reasons. 1. Unprecedented scalability and speed. PulseChain offers the potential for 1 million transactions per second, DPoS, and low fees make an attractive solution for high-volume decentralized applications, dApps. 2. Low inflation and strong tokenomics. The token emissions model is designed to encourage long-term staking and sustainability inflation rate, helping avoid the excessive dilution that can occur on other chains. 3. Delegated proof of stake, DPoS flexibility. PulseChain's DPoS system allows for efficient validator selection and low barriers to entry for passive investors, promoting decentralization and network security. 4. Active ecosystem and EVM compatibility. PulseChain's ability to support Ethereum-based applications, the EVM, and its active developer community give it significant room for growth and adoption. So everything on Ethereum can work on PulseChain. Investor-friendly and low costs and high reward potential. PulseChain's low fees and scalable architecture, coupled with its early stage growth potential, could offer a substantial rewards for investors willing to participate early in the ecosystem. So, first in, best dressed, guys. Doesn't mean later on you can't benefit from it as well, but the earlier you get in on this, the better. Given these factors, PulseChain provides a compelling alternative to other layer 1 blockchains, especially for those looking to capitalize on scalability, low fees, and growing ecosystem. Come on, PulseChain. Oh, I'm so happy about this. Yeah, you can see I'm stoked, hey guys. That guys means guys and girls, both included, yeah? Everyone here. So, okay, let's just jump across quickly. I want to close this out. We've been going for an hour and 47 minutes. Woof. Let's get a little something going on in the background here. A little bit of entertainment. What's going on here? Yeah. Okay. So over here, this is the blockchain. This is the PulseChain website, pulsechain.com. Gives you details for the inputting on MetaMask. This is so you can buy. This is so you can interact with the PulseChain ecosystem. For developers, here's the information for you. There's the documentations, the docs. How much you need to become a validator, 32 million Pulse. And this is the goals of PulseChain. Testimonials and the bridging. So let's just quickly click on a link. Let's see what happens with the blocks. Just going to load up that. Oh, this is the blocks doing on the Explorer. We don't need to see that. It's, when you go and select scan.pulsechain.com, you get taken to a decentralized website. So what's happened is PulseChain is, everything about PulseChain is decentralized. It's up to you to run this. And you can either use Pinto, which is a cloud, so you can just do it the easy way, but also you can download the code to run on your desktop. And that could be Windows, it doesn't have to be desktop, be laptop, wherever it may be, Windows ARM, Mac OS, operating system for Apple, Linux ARM. Yeah, so let's just do the one from my Pinto, the cloud. So it's using a cloud to run this blockchain explorer. And this is where you put your unique address or your transaction hash or block or token, and it will give you all the details here. So total blocks is 22,485,499 blocks. How many have you done? The daily transactions at the moment, 354,000. Very cool. All right. So get rid of that one. And then what else do we want to know? If you're going to go pulse.com. So gopulse.com, that's another great way to get into and just really quickly have a lot of details regarding the PulseChain ecosystem. Gives you the 4 main tickers, the 4 main Richard Hart ones. He developed, his team and him developed. PulseChain, PulseX, Incentive Coin, and Hex. Incentive you get from the pools, creating the pools on Pulse, the PulseX, which is the exchange, and Hex. I will create another stream and discuss more into these next time. But here is a great amount of information. Popular coins. Let's go back up to here, stats. So you can get the blocks, validators, bridging. So if you want to bridge, so you bridge from Ethereum to PulseChain. There is an actual bridge to connect on. Where is the actual bridge? Start. I'll find it next time. Anyway, apps. So when the snapshot was completed, the fork, just come here, go pulse.com/start, and if you put your unique wallet address here and go connect my wallet, it will show you all the cryptos you have on the PulseChain network. Very cool. And you just add those to your wallet. And let's go any other things to really just quickly jump on. Coins, overview, bubbles. Bubbles is purely for the PulseChain network. Yeah, not so good at the moment. Stables, stable coins. And what else? Telegram, Hex, coins, buy, portfolio, swap. Okay, cool. So you can do this on the Gold Pulse, but I prefer to go to PulseX. Now, if you want to go to, this is the PulseX page, the decentralized exchange. And this gives you a lot of information here. We're just going to quickly go onto this. And remember, this is, you can also download this onto your PC or Mac, whoever it may be. We're going to load it up in the cloud. The reason why it's saying, hey, this is the preferred way for you to do this is that so it's decentralized and not centralized. And this is where you can do your exchanging. You can connect your wallet, exchange the farming, where you get the incentive token. This is all the farms liquidity at the moment. So live, it's just taking a moment to load, but yeah, obviously because I'm streaming at the same time. Here's the Hex website, hex.com. And yep, obviously to mine, here it is, another decentralized way of loading it. You can also go to the cloud. It's going to try and launch it now. There it is. And this is where Hex, all the magic happens with Hex, but obviously you need to be collected. And this is where you can stake and unstake. Yep. And day in operation. So it's day the 19th of January. Progression, go Pulse, we already had that one there. Okay, just jumping off. So CoinMarketCap, one of the biggest centralized exchanges. It's listed Pulse, there it is there. It shows the total supply, 14.81 trillion. The max supply, same for PulseX. You can see total supply is 143 trillion. For Hex on PulseChain, it is 592 billion. For Hex on Ethereum, it's 633 billion. This is MetaMask. You can download this to your phone or your PC. And this is how you can interact with the PulseChain ecosystem. You can also sell, trade, swap on this, send, receive. And this is the common way usually to enter onto the to communicate with dApps and also softwares operating on Ethereum, but also more importantly on the PulseChain ecosystem. So you download MetaMask, and then you would go to an exchange world, or you can go to PulseChain. So instant buy or sell. So go to CoinSpot, which is a Australian one, or you can international Binance. Well, the easiest way to do it is you purchase Ethereum and you send Ethereum to your unique address on your MetaMask wallet. From MetaMask, you connect it to PulseChain and PulseX, and that's how you kick off and start doing your magic. But you need to bridge to get into the PulseChain ecosystem. It's a thing called bridging. So you need to bridge, and you can access the bridge from here. I'll just load the bridge now. And what this is you're bridging your assets. When PulseChain gets bigger, you won't need to do this, but that's just got an error at the moment. But anyway, you connect your wallet, and you're taking your assets from the Ethereum to the PulseChain. Once it's on the PulseChain, then you can use it. There's no issue. It works 100% flawlessly. And let's just finish up with a video. And I'm going to close out, guys.
Do you think we'll ever get to a point where aliens are so comfortable with us they can just come hang out?
Dude, I think Earth to aliens is a dump, dude. I think Earth to aliens, because aliens go on vacation every year, right? They're just like us, right? And they take their kids on a trip or whatever. And the kids who are so poor, right? And look, we were poor. My mom would take us to the beach when it was freezing cold and fucking wouldn't tell us, fucking whatever, dude. It was like, it seems cold. It's like, whatever. So, well, the aliens that don't care about their kids, whatever, they bring them here to fucking shit. They're like, oh, and the kid's like, we have to go to fucking Earth, dude. Our life sucks, Like the cool alien kids go to all more neater shit,
Right.
Does that make sense to you?
Do you think we'll ever get to a point where aliens...
Adopt PulseChain. let's make this place much better. Bitcoin, Ethereum, PulseChain. PulseChain, let's make PulseChain happen. Even if you're new players, I commend you. All right, guys, I'm checking out now. If you like this content, you want to hear more, like and subscribe, make suggestions. Yeah, also down in the extra details below, if you want to make a donation or a tip to me, it's well appreciative. I can upgrade the studio, get more technology and progress forward. And also just a little bit of shows a bit of a thanks for what I'm doing here. So yeah, have a good one, everybody. Take it easy. Have a wonderful day.